Hey everyone, Scott Cunningham, aka Scottsy Business here. Today we're going to be doing the fifth dividend portfolio review / report that I've done for my series. So there hasn't been a ton going on because, everyone's waiting for that second crash, right? I don't know if it's going to happen. And I was waiting myself for some time, and now I'm thinking, you know what, I'm just going to go back to dollar cost averaging, and if something happens, I've got some money set aside because actually I haven't been doing what I normally do. I've been saving up some money. I wanted to have like a nest egg in case something happens because I didn't really have that. I was lucky enough to keep my job throughout, everything that's going on, and actually getting more work, fortunately for myself. But if there was an issue, I don't know how much of savings I would have had available to me. So I want to kind of build up that nest egg for the future, and or if the market really tanks, then I'm probably just going to throw it all in because, there's so much opportunity if that happens. Otherwise, I'm just going to continue dollar cost averaging in because it is the safest way to invest, and it makes a lot of sense. So that being said, we're still going to take a look at the few changes that I've made since. I sold off all of my hotel stock in the last dividend update, I believe. I don't think hotels or travel or, air or anything like that is a safe investment right now. And I know there's a lot of opportunity, but I don't know, I just don't feel confident in it. And for most of the airlines, they don't have dividends. So I'm not really interested in that, and I'm not trying to play the growth stock game. I will very rarely, bet on one stock, or I was sort of doing that with the hotel stocks, but I got there right at the beginning. I was very fortunate to buy the lowest possible point of the dip in the first wave. So that was really fortunate for me. But most people aren't going to have that, so I don't think it's it's a safe investment, right? But for what I did purchase, I sold some of my Fiera Capital Corp only because it went up so ridiculously high, and I'm still up like a huge amount compared to everything else. So right now I'm up 40% on this stock. I could have just kept going and, but I feel like it's now so high up that if there's a second wave, I'm going to lose a lot of those gains. And so to lock in those gains, I decided to sell off a portion of it and invest it into some other stocks because I also want to balance out my portfolio, right? I've been capitalizing on the opportunity available to me, but at the end of the day, it's not very good for you as an investor if I was just moving that because I thought that was too low, but that's for this. But yeah, no, I mean, it's still important to make sure that you're actually balancing out the way that you want to invest and sticking with your goals and your strategy. So you can see there's a few small investments that I want to sort of balance out, but I'll do that as opportunity is available to me. So again, I said during this time, I'm still going to be focused on opportunity because there's still a huge opportunity in the market right now. As you can see, there's still a lot of stocks that are down up to, 50%. So there's still a ton of opportunity to take advantage of. There's so much gains that you can get. And I still think it is very, very lucrative to be investing right now. You're almost guaranteed on a lot of really low stocks to see that eventually come back, right? There could be another wave, but I'm certain within 2, 3, 4 years, whatever, you're gonna see a lot. We're probably gonna see all new highs within the next 5 years. I wouldn't be surprised, right? None of this is guaranteed. None of this is financial advice. But if you're investing long term, you should always expect the market to return to previous levels and probably even surpass them. We don't know that for sure, obviously, and nothing is guaranteed. But based on, previous recessions and depressions and when the market has gone down, it's usually, well, it's almost always returned and gone strong bullish for more years than it was down and it was bearish. So, that's important to keep in mind. And if you're doing a dividend investment portfolio to begin with, you're going to be doing it with a long-term strategy. So that shouldn't be a problem. And no one should be doing dividend portfolio investing with a short-term mindset, because that's not going to be very effective and it's not going to work out for you probably. So I only put a little bit of money into, I put about maybe like $400 or $500. Yeah, I mean, I put $100 in every month automatically, and then I dropped in $360. I wasn't tracking the money that I was putting in myself before, so now I'm tracking that. I could probably go back and backtrack that, but I don't think it's that concerning. I just want to be able to track when the money is being injected by me versus getting the gains. So what I spent that on was I took all of my dividend earnings and the cash that I had in the account. I then added 360 and I bought some Sun Life and Toronto Dominion Bank. The reason being that I'm kind of down on these stocks. These are some of my biggest losses because I was investing in these before the crash. So I was paying, like top dollar for these, and then, they went way down. So now that they're, 25% below their high, 26% below their high, I'm dollar costing averaging in to sort of make up for these losses. And I mean, these are great investments. So I'm not concerned about, I'm doing this just to appease, trying to get even and having like a sunk cost fallacy or something like that. It's more so that these are really, really strong assets and I'm trying to balance out my portfolio. And I mean, they're a good opportunity right now anyways, and banking and insurance is one of the main portions of my investing strategy. So, I wasn't too concerned going like 1% over, 0.72% over. Because this should just be a guide, not a rule, because you're going to lose out on good deals if you're just aggressively sticking to, some strategy. And this isn't necessarily binding or, authoritative, right? There's no perfect portfolio, but you can definitely set it up in the way that makes the most sense for you, right? So I've already explained this before, but I feel like real estate is some of the safest investments because people are always going to need somewhere to live, whether or not there's, issues with things being paused for COVID or whatnot. Yes, that could be an issue, but I think at the end of the day, most real estate is very, very safe, and I haven't really had any issues there. Energy is always going to be super important. Banking is very safe because banks will never fail because they'll be propped up and saved by governments or bought out by other banks. Insurance, very similar. And then ETFs are obviously, a healthy way to invest because it's a lot safer, but there could be like crappy stocks stuck in an ETF. So you really should go and make sure you look through it. I think that's important. And yeah, I'm only investing in like ones that I felt were, good stocks. And a lot of them ended up just investing in a lot of the other stocks that I'm already invested in. But it is a good way to, it's a more safe backup. So for example, during this crisis, a lot of the ETF stocks, or rather just the ETFs that I've invested in, they dropped the least, right? Or even if they did drop, their margin of change was so drastically lower than a lot of the other stocks. So it might not make sense to be investing in them during a downturn when they've only gone down a tiny bit. But, as things return, I'm going to be return to normal. I'm going to be investing in a lot more of the safer stocks that didn't change much. So I've got all these stocks that I've been looking at and ready to purchase at some point. I sold out of all my oil. I really don't know how I feel about the industry. Obviously, there's a lot of opportunity, but I really don't know how I feel about it. And because a lot of them cut their dividend, it just doesn't seem super ideal for me right now. And it's not essential to my investing strategy. And maybe I'll just go back into it once things go back to normal. Obviously, I'll miss out on some of the gains, but there's a lot of gains to be had everywhere. So I'm not super concerned about that. I really want to stick to the dividend portfolio. I don't want it to be, like a rule. It should be a guide, but it's closer to a rule than a guide, because once you start getting off of that, you're going to have all these stocks on hand that aren't making you anything. And slowly your dividend portfolio will become a praying growth stock, right? Like, because we don't actually know how these are going to change. But again, I mean, realistically, because of how down a lot of these are, there's so much upside and opportunity. And that's why I've been really just going off of that for the most part. I mean, obviously I'm getting good companies, but this is like a huge factor into whether or not I'm going for that specific stock. And I'm not really as focused as I normally am on balancing out my the categories or the fields that I'm actually investing in. But as I was mentioning before, these are all the stocks that barely had changes. And because of that, they're so safe. Like, they're extremely safe to invest in. And because of that, I will be investing in these stocks once everything is back to normal. You can see, even though some of them did have, like somewhat of a drop, a lot of them returned very quickly, or their drops were significantly less than other companies that had drops. I mean, like, this is pretty risky, but it's already back to its high, right? So even though there's companies that could drop drastically, the ones that are already back to their high, I think, are really, really safe, because it just shows that they're able to, perform really well in this crisis and get back to their previous highs, which many banks haven't even done. So something like a packaging company, of course, is going to do really well when everyone's ordering packages now. So even though they did drop a lot, I don't expect that to happen again, now that people are aware of which companies are actually very strong during this time versus ones that aren't. It still could, and if it does, I'll probably go back into it. But that's definitely something to keep in mind when you are making investments. I think it's important to have stocks that are really safe, and then you can go into those once everything sort of calms down and just keep your money a little bit safer, versus everything else, which has huge swings, which may have the same issue in another wave, which again, everyone is always talking about coming soon. So those were the main things that I did. I also bought at the beginning of last month, just after my previous dividend portfolio update. I haven't done an update in a while. Like I said, I've been saving a lot, so there has been a ton of changes. I wanted to get some food and grocery because, again, that's really, really safe right now. And I felt like consumer goods, I don't have very many, and I don't have any furniture stocks, and Leon's Furniture is a really great buy. Warren Buffett actually recently invested in them because he sees a lot of upside in it. I guess we both saw something there, so I thought that was, a good verification, or double check. When Warren Buffett buys something after you buy it, clearly that's a good sign. A lot of people will say, oh, he was wrong about airlines, but that's all speculation, and I don't think airlines are safe at all. And either way, I mean, he lost several million on that, or maybe even like more than that. But this year, apparently his gains were like 4 billion, or maybe way more than, I can't remember honestly, but his losses to gains for this year it's not even comparable. So people are just like, oh, he's wrong. It's like, he was wrong on one thing in a minor way comparatively to what he was right on. So, if someone loses $100 million and then gains $4 billion, I don't think they're feeling too bad about their decisions. So those are all the buys that I made, and that kind of covers everything. I've also added the trade costs because I'm pretty sure this wasn't as accurate as I wanted it to be before, because I don't think I was factoring in the cost for every individual trade and how that was affecting the values. So now that that's been corrected, this more accurately reflects how much I'm making. I'm only up 1.22% right now because stocks have been like kind of going down over the past week. Which is actually good because then I bought these stocks, so I bought them lower than I would have otherwise. So that's actually not too bad. If they start to go up next week, I probably won't buy anything. If they go down, I'll probably just keep dollar cost averaging in and still saving that money waiting for another dip. You know, if we get to a point where everything's more or less opened back up, we won't see any more closures or anything like that. I'm probably just going to go back to my fully regular dollar cost averaging schedule because there's only so long that you can wait for a second dip before you're just losing out on opportunity while the market continues to increase in value, and then you're just missing out. Obviously, though, if you do go in and then there's a dip, it's going to hurt a lot more. You're going to feel a lot worse if you lose a lot of money versus just miss out on some opportunity. That's just how psychology works, right? You're always going to feel worse about a loss than a gain. Then you're happy about a gain. So even a bigger gain than a loss, like you'll feel worse about the smaller loss than the bigger gain. You know, given you're not getting millions of dollars or something. Typically, that's how it works. So it's also good to just be aware of that, right? Like being aware of how your own psychology will affect your investing and how you'll feel about it. And knowing that you won't be as happy with a gain as you'll be as sad as from a loss. Just kind of having that in the back of your mind really helps keep you calm and rational as you do these things. So you don't kind of like get caught up in your own emotions and maybe make some crazy buys or crazy sells. That's everything for fiat. Realty has been going great. I still need to actually update this, but they've been paying out every day, which has been amazing. Unfortunately, for people in the US, they've been letting me know that you have to be an accredited investor if you're in the US for some reason to do these investments. Everyone else, like myself in Canada, we can invest in these without being accredited. So not really any issue for us, but this has been really, really great. Oh yeah, so sorry, the last time I updated it was about almost 3 weeks ago. So it's definitely higher than that. Sometimes I forget like which things I haven't or haven't updated. That's why I added this. Everything else is up to date. Yeah, I just need to add these in, but they've been paying out every day. They've been phenomenal. And I'm actually just surprised it's working out so well for me. And I'm making great gains from this, and absolutely couldn't be happier with it. Again, it might not be the most liquid, but it's a real asset, and you just get paid in crypto, and there's no problems. There's a property manager. That's why I like investing in real estate and REITs, because you don't have to deal with all the liability, but you get all the gains, and real estate will always be necessary. So that's why I like these. Maybe in the future, very soon, I will try just selling one of these, just to make sure it's not very challenging and like that it is liquid, because apparently you can sell these back to them and they'll pay the regular price. Though if it takes you longer than like 8 months, I believe, to actually decide to sell it back, they will charge you the fee or the realtor fee or whatever it is that would normally be applied. But if you sell it back within that time frame, they will not charge you for that, because you will probably make back that money anyways from the rent that you get, or somewhere close to that. I guess the idea is they don't want people just buying it for a year, making the money, and then selling out right after. I'm assuming anyways, or maybe it's just an incentive to, like, if you decide to go out, you're not going to lose any money in the first 6 months if you change your mind. So that's pretty useful. But yeah, I mean, it's something to take note of. In terms of regular crypto, this is where I made the most changes. I've just recently actually sold some of this. So for refund, they just paid out. I got 3,543,000 Satoshis, I believe, which is a pretty good value. I'll have to see what that actually translates to. But this only pays out quarterly. But it's been very, very, very good. Most people are selling at around this mark right now. So from when I bought it originally, it has gone way, way up. And I bought some more close to the dividend payout to just kind of capitalize on that. But I might be selling out most of it, unfortunately, for the people at Refund, because there was an issue with my payment being sent and it had to be done manually. And I don't hold it against them, but I don't feel comfortable investing in something that has issues and you have to do manual payments and stuff. That's why I've still been kind of like not super gung-ho on Hive blockchain, because it's been 5 months since they set it up, and I was supposed to get my airdrop, and I still haven't gotten it, and there's still no ETA on when that's going to happen. I don't know if it even will give me the airdrop. I assume they're going to do it, but I don't know. And it's not that I'm not recommending Hive because of that. I still think Hive is good and the platforms on there are great and everything. It seems very sketchy when they're holding back payments from certain people, and it feels like the same kind of things that people are complaining about on other platforms, like, PayPal's not paying me or whatever. I don't think it's malicious, but the fact that it's been 5 months, it might as well be malicious, because it seems like it's just not going to happen, right? Whether or not it was an error or it was malicious, if you don't fix it, it might as well just be malicious, right? Like if I crash into your car and I say, oh, sorry, it was an accident, you say, that's fine, pay me back, and then I don't pay you back. I'm the bad guy if I don't pay you back. But I'm not saying that Hive is bad or anything, or they're doing this stuff on purpose. Of course, it takes a long time, etc., etc. But it is concerning. So I can't recommend Hive until it actually happens, because not giving the money to people who you've promised, I can't in good conscience recommend that. This is also up to, I guess I might need to update just some of these values. I've been gaining Tron slowly but surely. I did sell out all of my Wink a few days ago, actually. I should probably update these before I start these with you guys. I was just kind of testing that out, but I don't really like the platform, and it's all gambling based. Not that there's any issue with that. I just rather have it all in one place, because I'm not even a huge fan of Tron. I think their investing model is really good for like making passive income and stuff. But once I start getting into all of their sub tokens, it becomes a little hectic, and I don't want to have to deal with trying to, get all that back into Tron and then selling it and all this different stuff. I'd rather just have it very simple and easy. BitTorrent is one of the only times that I make that exception, because, there's a lot of money to be made with BitTorrent. And I've been making good money with BitTorrent, so, I can't really complain there. With Bitmax is probably my favorite passive income out of all of these, because it is the only one that pays me out automatically and a lot of money, right? I mean, these all pay out automatically, but Binance is already known to have done some sketchy stuff with like Steam and different things like that. So I don't want to store a ton of money on there because I don't trust it. Whereas Bitmax is also an exchange, but they're paying me out so much that it's just like, it's pretty ridiculous, honestly. I think I've already made like $30 or $35 from them. I probably need to update this still. Last time I checked was $27, and they're posed to pay out $242 by the end of the year. Though this does change, so that might not be accurate, but they've by far got the highest payout. KU Coin is also really great. They're a little bit more, like a slower gain, but they feel a lot safer than most other coins, and it just feels like a really, really strong asset, so that's really good. It has gone a little bit down in price, but that's okay. Though when I did look at the price recently, it looked like it was kind of in a downtrend. So I think going forward, I won't be investing in KU Coin any more than I already have. Um, I just don't want to play that game. I'm probably going to look for something new to invest in. I've been looking at Celsius and DAI for just savings. So I'm probably going to test out those and then come back to you guys with my results for that. I had Kava and Ontology for a while, but I wasn't really getting payouts. Like maybe it's quarterly or something. I don't like the quarterly payouts, so I just stuck with things that were able to pay me every month just because, well, I mean, I can compound the interest faster, and I want to be able to easily track it and not like waiting 3 months to see any action or any activity rather. So I sold those at a gain, so I was happy about that. And if you're selling at a gain, it doesn't really matter, right? Even if you're looking for a dividend portfolio, but then you decide to switch something up and you sell at a gain, then why not, right? You're just making money and treating it like a growth stock. That's fine. So yeah, I'll be looking into some new ways to invest and make more passive income here, because a lot of these are getting to the point where there's a lot invested and I'm not really comfortable putting any more. Like I've got a little over 1,000 in Tron, almost, like 800 here, 700 here, almost 1,000 in Binance, in total about 4,858. And, it's gone up about 2.9% in value. I do have to update some of these values though, so that may not be the case now, but it's still been gaining me basically the same amount of interest, which has been phenomenal. And apparently it's posed to give me $806 Canadian this year, which is way more than I'm getting in fiat for about double the money. So that's pretty amazing. And I've been getting all that money so far. I've made about $75, and that's been fantastic. So yeah, I mean, crypto dividends do seem to yield a lot more, but again, they are a lot more risky. I do feel like I'm taking a lot of risks keeping my money in these, and that's why I don't want to have much more than around $1,000 in each, because then if there's an issue with one of them, I'm only going to lose like a portion of my investment versus like, having one single point of failure. So with new investments, I'm probably going to start diversifying more. Maybe I will bump these up a little bit more. Maybe I will just use their gains to continue investing in them. We'll see. I don't think I'm going to add any more principal to these, which is just my original investment, rather than I'll just keep reinvesting and compounding interest. And then, and then we'll dive into DAI and Celsius and how those work with staking. So that's pretty much everything for this one. You can also take a look quickly at my fiat dividend tracking. So here you can actually see my fiat dividends. I'm also going to start tracking crypto in here as well, so that there'll be like a separate one for crypto, and that way we'll have something similar to refer to, and we'll be able to track it the same way. But yeah, it's definitely been great. You can see here as we've continued to grow our accounts, and as dividends have kicked in, it's been going up and up and up. And now we're finally at the point where all of my dividends have more or less kicked in, and we're getting around the average that we should be getting, because as we've seen already, the average payout that I should be getting is about $43 a month, meaning that this is above average for this month. So naturally, we won't see that. We won't see these gains like this. This is set up if you're actually putting like a ton of money in, and it's just estimating your growth from before. I don't think the reason that this went up so drastically over this time was because I was investing a ton of money for very, very at a very cheap cost into the stock market. Now that may happen again, but I don't think this is going to go up as drastically as it has been. However, now that I'm switching my strategy, I'm going to be putting more money in. I'm proud to say that I've actually been saving about 50% of my income not including crypto. If you include crypto, then I'm saving probably upwards of 60 to 70% of my income. And pretty awesome. People say, I can't remember the exact stat, somewhere between 10 and 15 years, if you can save 50% of your income and live off of that, then you can retire off of that money invested entirely. So, 15 years, check back in. And if I'm retired, then I guess we'll know. But yeah, I mean, I'm really excited about this. It's going really well. And I'm excited to see how my investing continues to go. Now that I am making a little bit more income, I should be able to put more in every month. I'm looking at doing, I want to just kind of build up my savings a little bit more. And while I do that, I'll be putting about $650 in a month, and then plus my my automatic 100. And then after I've gotten my savings and my checkings to the point where I feel really happy with it, because I'm covering all of my expenses basically with crypto, I'm not needing to put much money into my checkings, etc. anymore. So once I get it to the goals that I've sort of laid out for all of my accounts, then all the rest of my money will be going into investing after that. So it'll be more like $1,500 to $2,000 a month being invested into fiat stocks, and then about a $500 to $1,000 being invested into crypto every month. So, it's really, really exciting. And I think it's really interesting that once you start to focus on investing and just growing your wealth, you find ways to save, you find ways to make more money and make things possible. Because it's like, I set a goal and I'm like, I want to save $1,000 a month, let's say, right? Or my goal, which was let's do $750 for investing. That's not necessarily saving because there's all the other money that I'm saving, but investing wise, I set this goal and then I unconsciously, I feel like, was able to attract more opportunities, and then I was able to get more work and increase my income by about $2,000 a month, and then most of that is going into investing. So it's interesting how you sort of manifest things, and I'm not saying I thought about it and it appeared into existence. It's focusing all this time and energy, and then you start to look for opportunities. And, money, a really great quote or saying that was said by Pat Bet-David, a great entrepreneur. He says, money will only go into the hands of people who want money and who like money and respect money. The people who say, oh, money is evil and money is this and money is that, they're not going to get money because they're already saying they don't like it, they don't want it, it's not good. The people who are seeking for opportunities and they're looking for money and they're like, money is good. It's good to have wealth and to share wealth and to be a part of the economy and contribute. Those people tend to have more money come to them naturally because they're looking for opportunities and they're open to these kinds of things. And it's not about magically making things happen. It's about putting yourself in the right environment, mindset, perspective to see the opportunities and to take advantage of them. So with that being said, that is my update for now. Unless much happens this month, I probably won't update you guys until the end of the month or next month. That being said, watch for the dip. If there is a dip, get in early, but maybe not too early. As they say, don't try to catch a falling sword. You wait for it to strike and then you go. So, watch for the second wave. I'm going to be dollar cost averaging in. If there is no second wave, which, there very well couldn't be because the market is extremely irrational right now, I'm just going to be, continuing as I have before and just keeping that nest egg on the side in case something happens, and then I can really put some heavy money into the market once there's more opportunity. But regardless, as we saw before, there's still a lot of opportunity in the market. And if you're going to be investing in dividend stocks, it's almost always a good time because given we're not at all-time highs, you're probably going to see a recovery unless you're investing in a bad company. So as long as the companies and the ETFs and whatever you're investing in is very strong and you believe that it's going to recover in the next few years, you should be good investing in those companies, especially if there's a good price opportunity right now. Anyways, though, this is not financial advice, but feel free to follow along with everything that I'm doing and, do your own research and all that good stuff. Also, my videos are going to, from now on, they're going to be showing up on Library first and then on YouTube about an hour later or so. And then I'll be linking back to Library, sort of putting up Library as my main platform. I have by far more followers, subscribers, base on Library than anywhere else. So that's going to kind of be my main focus now. I'm still going to be posting everywhere else, but Library is just going to be something that I will sort of call out to and let people know that if you want to see it first, it's where it's going to be. Thanks for watching this video to the very end. Since you did, make sure to give it a like and comment hashtag #1ham in the comments below, so that way I know that you watched the whole video. Also, please subscribe to this channel and feel free to follow me anywhere under @ScottCBusiness. I'm basically on every platform. You can also share this with someone else who might gain value from it, and that would be very helpful and impactful to helping my channel grow as well. If you'd like to support me more directly, you can also donate to scottcbusiness.eth or scottcbusiness.crypto listed below. Thank you so much for your support and for watching this video. I'm Scott Cunningham, aka Scottsy Business, signing off. Cheers.